All right, let's talk about Ford, which predicts it's going to lose $3 billion on electric vehicles this year, a painful part of the company's transition to EVs. But it still expects to hit profitability targets as a whole. Phil LeBeau spoke to the company's CFO about the company's guidance. Phil.
Well, when you look at their guidance today, I think people can take a little bit of something away from this. If you are skeptical about EVs and Ford's ability, you can say, look, they're going to lose $3 billion. They lost $2.1 billion last year. Sure, they say they're going to be profitable, but I don't buy into that. That's if you're skeptical. If you are optimistic about Ford's ability to use the cash that it's generating into this transition, look at the numbers this year. The legacy businesses, when we're talking about internal combustion engine vehicles, I mean, look at, they're going to bring, that's what they called Ford Blue under the new divisions, $7 billion. Ford Pro, they kill it when it comes to commercial vehicles. That's better than last year, $6 billion. And they're expecting, as they said last year, reaffirming their guidance of making between $9 and $11 billion. But it's that EV component. That's what people are focused on, guys.
Why is EV the focus? If they're projecting profits of $9 to $11 billion,
sure,
people are still buying gas engined machines. So why is EV the big shiny thing for Ford?
Well, it's not just Ford. It's all automakers. Look, it is the future. That's where we are headed, whether you believe it, 5 years, 10 years, 15 years. It is the future. And Ford believes that they can be profitable with electric vehicles. So by breaking it out into divisions, they think that there is clarity and will be clarity when they move towards profitability, which they're targeting 8% profit margins by the end of 26. When they actually move into profitability, whether it's end of 24, beginning of 25, that remains to be seen. They haven't given that much clarity. But they believe that if they can show people, look, we are profitable in EVs, then perhaps people will give them a greater multiple. That's what they're hoping for. That's what all the legacy automakers are hoping for.
Correct me if I'm wrong here, but I believe I was looking in Consumer Reports comparing a Ford F-150 conventional truck and a Ford EV F-150. The price difference is vast.
Well, it's not just that there's a difference in price. It's the cost component there.
Well, it's the cost of making the car.
The cost of making the car. The battery is killing them on the F-150 Lightning.
So how are they going to make that gap compress?
Sure. That gets to the heart of how are they going to be profitable in EVs. And what they say is that over the next 4 years, they will turn a negative 40% margin on their EVs into positive 8%. How? Couple of areas. One is going to be scale. As they build more of their batteries, you add that, you increase your sales to about 2 million vehicles by 2026, the end of 2026. At the end of this year, they think they're going to be at 600,000. You do that, and then they say, we're going to drive down costs with design, engineering, as well as the battery. They believe all of that gets them to profitability. But the real question for Ford, especially after the fourth quarter, is, look, you had a real cost problem in the fourth quarter. And that's in your legacy business. How can we be sure that you're going to be able to get rid of those costs, not only in the legacy business, but also as you move to EVs?